Certainly inflation, at least at this point, has not died down. We're seeing PCE at a 40-year high, CPI at a 40-year high.
This is a huge, huge point for many traders and investors right now, whether or not the yield curve, whichever part you look at, 2s, 10s, 3 months, 10s, 5s, 30s, whether or not it still is as reliable a recession indicator.
We often hear about the GDP of a country and how it's a measure of the economy's overall health. However, GDP is just one indicator, and it can be quite volatile. A less frequently discussed but equally important metric is the ISM index. In a recent interview, Raoul Pal talked about the useful indicators that investors can examine on a regular basis to get a reasonable understanding of the macro environment. In this video, we'll take a look at what Raoul Pal thinks about the ISM index, business cycle indicators, and how they can be useful in understanding the health of the economy. We'll also cover if he believes this is a recession, and what the next few months would be like for the economy. So let's dive into the video. But before that, be sure to subscribe for more videos on economy and crypto.
Firstly, the thing that gives you the best guide is something called the ISM survey. And you can Google it, you can find it, it's publicly available. And that basically, anything above 50, the economy's expanding. Anything below 50, it's kind of stalling. And anything below 47 is a recession. And that's been going since about 1947. It's an incredibly good indicator and really useful. So think of it as a kind of weekly version of GDP. So that gives you a very quick ballpark. And what's really interesting that no economists figure out, and I don't understand this, is it goes up and down. It's cyclical, right? Economists have linear projections. It's like, really? You can show a small child a chart of GDP and they go, well, it goes up and down. So what it does, if you see it going down and crossing 50, you know we're likely to be headed into a weak patch or a recession. If it's coming up from the lows, we can start looking forwards. So that's a really simple.
The ISM index is often seen as a leading indicator of economic activity, as changes in the ISM index tend to precede changes in GDP. ISM is the best indicator that investors can examine on a regular basis to get the most complete picture. Just like that, I'm always trying to give you guys the complete picture of the economy and market, so be sure to give this video a big thumbs up. Really appreciated. Getting ahead, we can all see US stocks rally after ISM data shows improvement to the economy. The major US indices were up around midday, as investors reviewed stronger data from the ISM services report. Even the crypto market could be seen going well. For the past few days, Bitcoin can be seen opening and closing near $23,000. Traders also shook off some of the concerns involving Nancy Pelosi's visit to Taiwan.
The other way is the bond market's usually very good at this. So once yields start falling, bond markets are generally derive their price action from two things: GDP growth and future inflation. So if bond yields are rallying, it's saying that GDP is probably slowing down, i.e. there's a chance of stimulus to come and bonds look a safe haven. And secondly, that inflation is likely to come down in the future. So those two things alone give you pretty much all you ever need to know. Now, what's really interesting, the second degree of all of that is there's a bit of magic. So you look at this ISM survey, you go, well, how does it help me with my equity allocation or my allocation? All you do is turn it into a year-on-year chart. And all of the year-on-year charts of every asset, from oil to bonds to commodities, to copper, to equities, to emerging markets, to credit spreads, are all the same chart. They're driven by the business cycle. And some things are pricing in more right now and others are pricing in less. So the bond market's pricing in less, as is the oil market. But things like tech stocks are pricing in an ISM of 35, which is a deep recession. So then it gives you kind of a relative understanding of, okay, where should I be looking at allocating my money? So there's some relatively simple tools.
The second best indicator is bonds. At the start of this month, Raoul Pal also tweeted that bond yields are nearly off 100 BPS, from the highs showcasing the chart. He believes that inflation is yesterday's news. Let's go back to his interview as he talks more about the current state of the market.
Yeah, I mean, does technical analysis lead to price action or does it not? All I know is if you listen to Stan Druckenmiller over the last 20 years, every time he gives an interview, he says, you know where the economy is by looking at the internals of the stock market. What does he mean? It means things like consumer discretionary stocks versus utilities. If the economy is slowing, then discretionary stocks, i.e. the discretionary spending, tends to fall. Utilities are the things we have to have, so they tend to do well. They're all correlated with the business cycle. The business cycle, I mean, I've got business cycle indicators going back to 1870. They still work. So even though more people might look at them over time, I still don't think it's necessarily the driver of price action. If not, you would have seen more assets priced in the same move. But we haven't, right? We've got bonds up here, haven't priced in much of a weakening ISM. And then we've got tech stocks, which are at the bottom, which are priced in a massive amount of weakening.
Raoul Pal believes discretionary stocks, utility stocks, everything is correlated with the business cycle. According to him, in moments of economic downturns, investors move away from discretionary stocks to utility stocks, which tend to perform better. Before going ahead in the video, don't forget to like and share if you find the video valuable. Recently, in an interview with CNBC, when Fred James Bullard was asked about the current state of the economy, he said he thinks the economy can avoid a recession, even though central banks will need to keep hiking rates to control inflation. Do you agree with James? Do you think the economy can avoid a recession ahead? Let us know in the comments below. While it's difficult to predict the future of the economy, people are having different views on inflation and recession. Let's go ahead and see what Raoul Pal has to say on this matter.
So, always at turning points, there is no consensus, because there's a group that extrapolates the recent trend and says that's going to continue, and there's a group that extrapolates a mean reversion. Now, the question is here is more complicated because we've got these supply issues, we've got, onshoring, we've got other things that are muddying the equation, and what we've got is this big debate. So myself, David Rosenberg, and maybe Urian and a few others kind of think we probably mean revert because of debt, demographics, technology, that inflation's not a long-term issue. But there's a whole other group who I really respect who are saying, no, you're dead wrong. Inflation's sticky, it's here to stay, and it's a big problem. And we won't know, and this is the beauty of financial markets, right? It's game on now. We've got the game, we place our bets, and we'll find out who's right and who's wrong.
Lately, there are two main camps when it comes to inflation. Those who believe it is not a long-term issue, and those who believe it is sticky and here to stay. Recently, Raoul Pal also tweeted, "Oil is now following gasoline and breaking lower." He mentioned that soon, inflation 5-year break-evens should reverse head down to below 2%. It's hard to say what the future holds. You see, the financial markets are in a constant state of flux, and that's what makes them so exciting. You never know what the next big thing is going to be, and it's always a game to try and predict it. And Raoul Pal believes in the same thing as well. Which indicator do you think is the best for analyzing recession? Is inflation here to stay for long or not? Let me know your thoughts in the comments below. That's it for today's video. I'll see you all in my next video. So be sure to subscribe, like, and share for more videos on economy and crypto. Also, don't forget to hit that bell icon to never miss any video. Adios!